So my name is Shannon. I run an e-commerce company for women. Started 3.5 years ago from zero. Had to fundraise. Went through 4 painful fundraises. Actually going through one now. It's not the best. Like, it's exciting in the beginning, and then it's like, oh my God, am I gonna get the money in, et cetera, et cetera. So I could talk to you about like how I started, you know, what I had before, actually, what I had to prepare to actually get to where I'm at, and you know, some tricks that I've kind of gained over the years. And that's me. I'm Orami. And Soonhee here.
Hi everyone, my name is Soonhee Kim. I'm from OPTC. Just let me do the quick introduction of OPT Group. OPT Group is the Japanese company listed in Japanese market. OPTC is designed for arm of investment and incubation in Southeast Asia for OPT Group. OPT Group is basically 3 core business. One is the digital, holistic digital marketing, and second is, of course, investment and incubation, and third is the, well, you know, that big data, you know, it's really trend word. So they're basically a very technology-oriented solution business. So again, I'm the partner of the OPTC, taking care of the investments and incubations in the Southeast Asia market for OPT Group. Okay, so far over the region we have 10 or 11, I would say 11 portfolio throughout the region. All of them in tech, so pretty much it's a digital marketing company. We do the hands-on, so our focus is more of the seed and pre-A up to the Series A. So basically the very early stage of the startup to help the growth hack or how to you know, the marketing side, so we can pretty much handle.
When I actually started fundraising, I did not have a product. So let me ask you guys, who has a product? Who's already making revenues? Okay, see, that's a good sign. Who has a business plan and has not made revenues yet? Okay, so that's exactly it. So that's actually one of the thresholds to doing this. In terms of for when I started with just a plan. And so there's hope for people yet. I started with just a plan. I had a team. And I actually raised based on the team's success track record, because one of the first things that people actually look for is who's going to run it, do they have experience to run it, and I had worked at Lazada before, so they saw that my track record could run it.
My name is Vicharee, Vichit Vadakan, and I am the founder of The Commons. Has anybody heard about The Commons? You have. Who has been there? Oh, wonderful, thank you.
When do you know that you have to start raising capital? For example, if I could ask you, your first, let's talk about the roast. Because the Commons is such a massive project. So let's talk about roast. Can you tell us from the day that you had the idea to start roast until the, you know, did you fundraise? Did you use internal? Was it your own money? Was it your family's money? Mm-hmm. Can you walk us through the steps of that? And then, yeah.
Sure. So with Roast, actually the person who initially started Roast was my brother. Okay. And he started that about 5 years ago, starting from a very, very small cafe that was on Sukhumvit 24. It wasn't actually called Roast at that point. It was a 12-seater cafe. And because of that small scale, we didn't actually do any fundraising. We used our own sort of family funds to start that. And as that grew, then we opened another location, and we sort of used the money that's generated from the operations as well as some more of our own financing to fund it. So we did not actually raise any capital for Rose.
So I'm going to pause on that a little bit. A lot of people think about fundraising as like, oh, dollars, dollars, dollars. But frankly, having gone through the drill and talking to a lot of people, more and more trends that I've seen is exactly what Kun Vicharee has done, which is to hold on longer and actually not fundraise. And so like you did, so where did you get the initial cash to do the 12-seater, for example?
That was just from family.
Family
So
and
basically, not even friends, just family.
Okay. And of course, you had a business plan
Yes.
that you told your family, hey, it's going to make X amount of money. We're going to break even by 1 year.
Yes, and because it was mainly our parents, it was quite an easy
Okay.
audience.
Okay. So first bet, same with me. I went parents first. Then I went to friends, and then people who trusted me as well. Now, getting bigger. So after after the 12-seater.
So after the 12-seater, then we started roast on Tong Lot 13. And again, that was just, using our family's funding. So, the story, I think like the more interesting part probably starts, with the concept of the commons, because that's, a much bigger project, and that's when we really needed to start thinking about fundraising.
And just on that part, I mean, at that point, you already had the success track record.
Yes.
So this is something that's important in both tech as well as non-tech, which is you need to have the team, you need to have what we call traction, you have to have a proven track record already, and then, next.
And then, so we started off really with a dream of what we wanted to build. And, and we, of course, we had a business plan, we had, very solid numbers in terms of, the investment needed, how long it would take to break even, what's our, projected revenue stream, and so on and so forth. And then, we had a portion of the funding we were planning to, put in again, just our family funds as a portion of that. But we also, had planned that we would, get fundraising through, actually, to go back one step, it was very important to us that, that we kept as much of the equity within, the family, or, because I think the concept is something quite different or quite new, and we really wanted control of management and of the direction of the business. So it was really, my brother and I and our family, where we had a very clear vision of what we wanted to accomplish, and so we really wanted to maintain control, and we didn't want to be forced into a situation where we would be forced to get certain tenants that we didn't really want, or, start leasing out a lot of the space instead of having, the common area. So these were things that were important. So we knew we wanted to keep control, within, sort of, and management control within, the family. So we thought, we would do partly, our own family funds, and then the rest would be bank financing. However, we thought
your options at that time was internal funds from family, and then
some friends.
and then bank.
And yes,
So no VCs, no hedge funds, no nothing, no angels. Like
no,
it was
we
just
were
bank.
we were just thinking banks at first, and we took a very cautious approach. So we actually tried to get almost all of our tenants, even before we went to the banks. So we, because we were in the F&B business already, it was easy to get. We had some connections, and we knew. We really wanted experts in each field, and we sort of were very specific about who we targeted to join the project, and so we had I would say like close to 60% of the space rented, or at least people were interested, firmed already, and it seemed like the projected revenue stream. I mean, everything seemed like it would be pretty safe, a safe thing for the banks. However, they really did not understand what we were doing, because I think we didn't.
What was wrong with it? Was it the concept, or
basically
was it?
To them everything was wrong with it, because we didn't fit their usual formula, I guess, of thinking about building a community mall, because they put us in the group of community malls, and for them it was, why are you building 5,000 square feet but only leasing out 2,000? That's less than half. And they're like, usually it has to be the other way around. And they were saying to us, you have no anchor. You have no banks. You have no McDonald's. You have no Starbucks. Like, who's going to go to your place? And they looked at our tenant list and they didn't know most of the people. And so we ended up not getting funding.
And just for those interested in bank loans, usually you need to have 3 years of financial performance already. You can't just go get, and then like in your situation, you're supposed to have collateral, for example, and you did. So for example, you mentioned about 6 companies just there. And when you first came across them, were any of them profitable?
None of them.
Okay, so we have hope. And you still invested in them. Were any of them, okay, so EBITDA positive, no, none of them are profitable. Let's do something that's easy for people to understand. I mean, e-commerce, right? I think
Sure.
digital marketing is a bit difficult here, so let's do e-commerce. The company that you invested in, we won't name names, how much revenues did they have? Was it big? How long have they been around?
Not at all. They don't. Yeah, that's definitely not big in Southeast Asia. So I cannot say just exact number.
Can you do like orders a day?
Well, a day, 1,000, 2,000, something like that. Older.
That's a
Per
lot.
month, I would say.
So, like, for example, I could tell you from e-commerce, right? If you do 1,000 orders a day, each order, average basket size in Asia is, what's the number? Like 1,000 baht? 1,000 baht per basket size? What's our basket size? Ours is like 4,000. 3,000. So if each basket size is 3,000 baht times 1,000, who can add here? Times 1,000 orders.
Well, first of all, 3,000 AOB is pretty big.
Okay, so
That's
let's
the
do
thing, too.
2,000. Let's do 2,000. 1,000.
Yeah.
Let's be safe.
Yeah.
1,000 orders a day, and each order is 1,000. I can't add. 1 million. So that's 1 million. Are you sure that's 1 million?
Is it? Did I do my math right?
Okay. Thank you for
Per
that.
month.
I don't have my Excel
Per
here.
month.
So
Per month.
Per month.
Not a day.
Oh wow. So we have hope, right? So that's 1 million baht a month divided by 30 days, right? So I can't add.
Starting point is something like that,
So-
of course. But at least they have a transaction.
Yeah, and so
Yeah.
that's the point that I'm trying to get at without my failure to count here, is the fact that you need to have orders already, and you need to have some kind of trend already. It's not like one day 50 orders and then all of a sudden 0, because if not, then you could do a big sale, and then basically what they're trying to understand is that you can sustain your business and it will grow. And so one day you will either be able to pay them back, or they'll get their money back through dividends. That's basically what investors are looking at.
Yeah, and also how do you get those million transaction is important as well. So we call it unit economics. Of course, we spread all the voucher, 50% off, the 60% off. So it's the easiest to get the transaction. So how you actually optimize those, the acquisition. So that's actually the very key point.
So user acquisition, those that are in tech or doing businesses that have to do tech. So what that means is, how much money do you have to spend to get that one person online to buy your thing, whether it be online or offline? In general, like, you need to have a plan and strategy to do so, and then at the end of the day, you need to make more money than you spent on that one person to be able to generate income, right? So more stuff that you guys look at.
Again, I'm not saying the voucher policies is not all bad. It's dependent on the definitely strategic plan. Okay, well, they need to acquire per se the new users, more interested to your site. So sometimes you need some spread out the vouchers or some kind of the benefits to users to come to your site. So again, it's really dependent on the strong strategic plan from the founder side. So it's, yes, it shouldn't be like an impulsive, okay, well, we need the one day, the money one day, a daily cash.
Right.
So it's depending on the strong strategic points. So how they execute one by one, that's how we see it.
So I guess that's a little bit on the VC side, those people who are actually looking to raise funds from VC. So again, for example, for us, let's go through the options of how many ways you can raise funds, right? So 1, there's family. 2, there's friends. 3, there's angel investors. What that means is people who are not institutional investors. Usually they would put in 50K USD to 150K USD. Then there's what we call seed, which is also angel. Seed is actually the round. Then there's VCs, which are institutional, and that's basically where OPTC comes in. In my experience, there's not too many VCs here in Thailand. I actually had to fly to Singapore and start going to conferences to actually, and I could talk to you about this afterwards, those that are in tech. But then there's also free money, and then there's banks. But then there's also free money out there. And this is something that perhaps it's not been completely explored. Certain governments give out grants. If you're Singaporean, have a company registered in Singapore, there are grants out there that are available to you that you could apply for if you have something that has to do with Singapore. There's a whole thing online, you could go search it. Same thing in Hong Kong. Not as much as Singapore. Singapore really is the leader. Thailand has just started doing that. So you can do that research. I think it just happened like 3-4 months ago. So I think it's really new, but there are some new grants out there for free money. But it goes back to what we were just talking about here. Like you have to have a plan, possibly revenues, a good team, some traction. If you have collateral, that's good too, you know. So these are things that basically give investors security that you will either pay it back or they'll get their money back. Okay, so let's talk about, okay. So you were talking about your issues with the banks and raising. Mm-hmm. Now, at that point, what happened? I mean, you were raising and then...
So it was very much a stressful, like extremely stressful time because we already had signed the lease on the land. And we, had the plan, we had tenants that had confirmed, but, we didn't have any money. So we spoke to a lot of people. I have, I have to thank some of my lawyer friends. I had lawyer friends at Baker McKinsey who, sort of gave me some advice in terms of, how to go forward. So because, as I mentioned, keeping control and management control was important, we didn't, we had to try to be creative in raising funds. So the advice that we got was, to try to go to not just like family and friends, but also other investors, potential investors who really shared the same value and really understood what we were trying to do. And so we structured it in a way that, would be rather attractive for them. So we said that, we would give them, a guaranteed return. So it wasn't set up as equity, but it was set up, so it was a loan, but it was with, a guaranteed return, and that, they would make a certain amount within, a certain number of years, basically. And we split up the units into like quite small units so that, it was, if someone had, say, 1 million baht, they could invest. But if someone had 30 million, they could also invest. So we did it that way. And it took a lot of convincing, so it was definitely more difficult than asking from family. Right. So, we had to have like a very solid, business plan. We, with like, again, the projections of the revenue, they looked into, our tenants and really made sure that we had, confirmed, tenants. And yeah, so it actually took us about almost 9 months in order to raise, all of the funds that we needed.
Now, you have a lot of investors, and this is where it will tie back to Soonhee as well. what kind of information did they ask from you? And this is the part where we get into what we call due diligence, right? So you have somebody, it's like, okay, I'll invest in you. Then what's the next step? So, and I'm gonna ask you because you actually have a checklist, right? So normal things, I mean, this is what VCs and banks and everybody does, right? Do you have, this? Do you have financial statements? Do you have this and that? Can you maybe go through with us a little bit on, for example, all the deals that you did last year? What are the normal docs and checklists that they have to?
I mean, in terms of the serious due diligence, of course, you need to open up everything basically, legally, financially, you have to be naked, basically, right? But before going to the official, a detailed due diligence, of course, the first things we make sure what is your vision, what is your goal. What are you trying to create in the society? So without the strong vision, none of the projection or none of the business plan is not really valid. So that's the first thing I make sure. Okay. And second thing is definitely profile of the co-founders or management team. Mm-hmm. Yeah, we actually checked all the references as well. That's for sure. We make sure what's the background. We make sure what's the social reference, all those things. Third, pretty much that would be the first step. The next one is, definitely projections, of course. And then, one more thing. As for we are the tech venture capital, we definitely check that they have a CTO. Yeah.
Okay. Big note. For anybody in tech, make sure you have a CTO founder or a CTO hire.
Co-founder, the background, the engineering or any tech.
So I guess what we have in common here is there's a team, right, that you did due diligence. You guys both have a vision, that you guys do. Then after you do that, then the actual business itself, is the business making money, any kind of money, or are there projections? So do you know your stuff in terms of financial? If I give you money, where's each dollar gonna go? And then after that, then people get to the part where you're discussing valuation. And it's actually quite a fancy word. I mean, people can talk about multiples and how you value your company and everything, but basically, for example, like for Vicharee, if she had 60% of tenants already, then her project is worth X, right? But if she only had one, her project is worth X. And same thing with that, say, e-commerce company, they had 1,000 orders a month, but if they only had 2, then it's worth X. But then if it's got 5,000 orders a month, then it's worth X. So then you guys start to get into this, not argument, but friendly negotiation on how much the company is worth. And the reason why that's important is because if somebody puts in X, then they get X of your company, right? So that's the percentage ownership that you actually get. Then we get to the final stage, which actually is the due diligence. And like Soonhee was talking about, and what you've also gone through, is you go through the business, we just went through the business checks, the company co-founder checks, legal checks. Is there anything, for example, e-commerce, you actually have to have a license called direct sales license. That's something that you gotta apply at the Department of Business Development, Ministry of Commerce, for example. Do you have that yet? If not, you're actually illegal, right? You actually have to get that done. And if you don't have it and people find out, you could actually shut down your business for 3 months, and then that's no money back to the investors, for example. So that's legal stuff. Then they do, so it's financial due diligence, legal due diligence, and then they want to know if you have the plan for the future, which is your business plan, so the marketing and all this other stuff as well. And then, like she says, tech, if it's the backbone, you gotta have that as a longevity, because the problem in tech is if your CTO quits, you're hostage, right? You basically don't have a product. So, again, I guess that's...
including those legal, IT property as well, what?
IP?
IP property and then also IT information property as well. So what belongs to who, that's very important as well.
First time I raised money, and this was before I had a product, it took me 6 months. And it's also because I didn't have a product yet. So what I actually had to do is go back and build a website and prove all that. Second time I raised money, it took me 3 months. And actually in the past couple years, it's taken me average at 3 months. But this year has been incredibly long and incredibly hard because there's a lot of tech out there and a lot of business. I mean, this year the market's shit. It's been a really bad year. It's actually taken a lot of the people I know in the industry closer to 6 months. So one advice that I'd like to say is if you're planning on raising money, once you get your, don't wait 3 months. Like, plan it, and then the longer that you have more cash in the bank, then the more leverage that you can actually, because if people know that you're running out of money, then they're going to bring down your value. In Thailand, like startup, which I'm in, right, tech, it's only started 3 years ago. I mean, actually prior to that, I still don't really know where proprietors who aren't tech raise from. I mean, I talk to so many people. SME bank is really difficult. Again, banks, if you don't have collateral, it's really difficult. Like in Thailand, most people like to just, it's
Family, friends, I think. Right? Yeah.
But in Thailand, in terms of tech, like all I know is 3 years ago when I started, there was probably one wannabe VC. They didn't even know what tech was. They really thought that tech was IT system and internet. But just to clarify, tech is something that's your backbone to actually to accelerate your business. Some of the characteristics of being a tech startup is that you have, again, tech as a backbone. For example, we do e-commerce. We have, everything is online, right? I transact online, I connect to my logistics online and all that. But also the fact that I can scale really quickly. So I'm trying to build an e-commerce that will ship to all over Thailand, whereas Central, who has a building, has 10 years to actually make the same kind of money. So that's kind of different. The ability to scale, and that's kind of why tech, is becoming this booming thing. And to answer your question, 3 years ago, it wasn't around, right? Because Silicon Valley just started, 10, 15 years ago. So that's one main thing. Then the other thing is the government never got on the bandwagon till only a couple months ago. And then now there's actually grants that's being offered. And then now more people, angels and Thai people, there's a lot of Thai private wealth people that have started now. So I know some angels too, if you would like to talk later, but that's fine. But yeah, go to Singapore if you're actually really serious. That's where all the money is at. More questions? You had more for it.
Actually, I agree with what Shannon says, but actually I don't really see it difficult. I mean, only a tech bar. I'm from the tech bar. It's really booming, and like Shannon said, Thai startup tech part startups venture capital ecosystem and then startup ecosystem just started, and it's now much more player, much more layers as well with the investment. So I think it's a pretty good timings to much easier to talk to the venture capitals. It's actually easier to find venture capitals.
And she's one too. She lives in Thailand.
Although the corporate started the corporate venture capital as well, so everybody's looking for startups in tech part though. So I don't see really difficult, and they always looking for local talents. They prefer the local founders, of course. Who knows better? So most of my portfolio is actually mixture local and foreigners founders, which is quite really good balance as well. So yeah, I don't really see it so much difficult in tech part to raise capital right now in Thailand.
The other thing that I was thinking about is what is available in Thailand now are these things called accelerators. And what they do, and you will find, I think one of the best ones is DTech Accelerator. There's another one, SCB Ventures has one called Digital Ventures, more in fintech. There's another one, I think True Ascend actually has one. Most of the telco mobile ones, Invent is AIS, also has one. Yeah, so the reason why that's good is like, you get a crash course into how they prep you for VCs, basically. So you get exposure, you get the free PR. They actually say, okay, you don't know how to write a business plan. Here's how you write it. Here, they have partnerships, so then you could actually grow your business. So I know a few that are in the accelerator programs, and through DTAC's accelerator program, they have like, you know, high exposure and all this other stuff, and they were able to shoot up their revenue from on a month-to-month basis. So right by the time they graduated, per se, from that, the last day is a thing called Demo Day, where people actually are on stage and they showcase their startups, and then in the audience are all investors from all over Asia. So because of everybody being there, not only do you get yourself ready, but they also give you access to VCs at that place. Some accelerators actually might invest in you at the end of the thing, but yeah, that's another possible way for people who are just breaking into this.
Definitely Indonesia, of course. I mean, actually, Indonesia, the leading country in the Southeast Asia. But the funny thing is that Indonesia company, well, Orami does, but not really entering the Thailand. And I think I would say the country just the standalone to make sense is only Thailand and Indonesia. So other countries, for example, Singapore, Malaysia, the Philippines, they always trying to expand all of the Southeast Asia. But Thailand and Indonesia, the standalone country market itself is pretty good enough. Yeah.
So one big red flag for me, which is something that I messed up on my first year, which was I said I did 3 things, and then they're like, so what do you do? You know, and so usually, and this is what I had to learn from my mistake, and basically at that time I was doing e-commerce, logistics, and lead generation, and it was like, so what do you do? Okay, what if one thing doesn't work out? You're gonna move, all your cash is gonna go into this and whatever, right? Little advice, focus on one.
Yeah, the products right now. People like
Okay.
the products.
So with the product, back to what she said, market sizing, you can, that's an easy comparable for that one, you would say?
Yeah, ultimately just market size, you know, which market size you're targeted to and how you try to make money. That's really simple. So you don't have to, you don't have to explain this a whole, you know, the business plot and business model and stuff. Oh, this is what we're trying to target. You know, this is where I get the money from. You know, this market size, you know, this much. That's really simple.
What she just said was, for example, if your hair product, we were talking earlier, you make shampoo and your hair product is avocado. Let's just say your product one day is like the Honest Company, right? That, how much valuation was that? It's like $1 billion, like something, right? So basically that's your market size. Or I'm exaggerating, but you need to look at something that's very similar to what you do, and then say that, okay, in Singapore, which is the closest thing to Thai, because again, I haven't seen it in Indo. You know, I haven't.
This is a really new concept in Asia. I mean,
Understand,
that's really
but the thing
new.
is, you need to make sure that the investors want you to lay it all out. Like, even for me, it's like women e-commerce. No, where has it been done in the world? I'm like, it hasn't. You know, so it took a while, but then, you know, I had to have my own comparables of why it works. So you need to lay it out for them because they're not going to go do their research.
Exactly, and I think I agree, and I feel like, so comparables can be, you know, you could even just look at the US market and how that originally started, and, you know, how much share of the hair care product, you know, is it now in the US, and then sort of apply that to the market here. So I think, you know, and it could be your best guess. I mean, it doesn't have to be down to the
Thailand's
point.
like 50%
less
than US, which
or the population in Thailand that could afford this type of hair care product is a certain percent, and you apply that. And then that's your best estimate. But I agree that you need to lay it out for them. You need to be able to say, I estimate, the market size here is X. Because if you can't do that, then it's very difficult for the investors. Yeah, I think that if you can't afford to get, a professional market research firm, there's still a lot of public data out there that you could use, and also you can always find, comparables of, a comparable business in another country maybe that has already started up and use that as an example. And when you present the numbers, I would always, have not just one scenario. I think it's always good to go with, this is your best case, and this is your estimated case. So try to show that you've done your homework, and that, even within sort of the range, that it's still, feasible, that your product and your plan is still feasible.
When you get a lot of people that's interested in your product, then it's time that you decide, right? You're inviting them to invest in this opportunity to make money with you, like it wasn't their idea. So you need to do due diligence on the VC as well. Like, what can they add? Do they have distribution in China? Do they have contacts in media? Do they also add anything else above and beyond money? But also, can you get along with them, and can you make sure that they're always going to be around? Because an investment is not just money, it's actually a marriage. You're going to be with them a long time, and you're going to disagree on things as well. So really important things I've learned.
And to build on that a bit, I think you said you can position it as, you're giving them this opportunity to make money with you. And I think that's very important, because you don't want to seem desperate. And as we learned, as we raised a portion, then it became easier and easier.
Yeah.
It definitely becomes easier to raise that final bit, because now you have credibility, and then there's that fear of missing out as well. We're like, oh, we only have 2 units left now, and everyone's now trying to get that.